Welcome to The Explainer. Today, we're cracking open a professional analysis of Micron Technology. A stock chart tells you what happened, but the technicals, they can tell you why, and maybe even what's coming next. So what are they telling us right now? Let's find out. All right, let's start with the big one. In just 3 months, Micron stock absolutely rocketed up by 32%. I mean, that's a huge move by any measure. But a number like this, it's really just the start of the story. It makes you ask the real question: what's actually driving this, and is it built to last? And that right there is the big mystery we're looking into. Are we watching a fundamentally strong, sustainable rally that's got more room to run? Or is this one of those classic bubbles that's just getting ready to pop? To get to the truth, we've got to dig into the evidence that the analysis lays out. Okay, so our investigation is going to start with the most basic clues you can find: the price itself and the volume, how many shares are actually being traded. Think of these as the footprints left behind by the market, and believe me, they tell us a whole lot about conviction. Now, what this shows us is a really powerful combo. Look at the biggest price jumps. We're talking over 5, even 7% in a single day. These didn't just happen out of nowhere. They happened on days with massive, and I mean massive, trading volume. For an analyst, that's a huge green flag. It says this isn't just random speculation. This is serious conviction from major players, all but confirming the uptrend. So the basic evidence looks pretty compelling, right? But to really get a feel for the trend's health, we need to pop the hood and look at the specialized tools on an analyst's dashboard. These are the indicators that measure its true strength and momentum. Think of moving averages as the trend's shadow. Well, right now, this stock is basically floating, completely detached from its shadow. The price is way up there, just soaring, far, far above its long-term foundation. The 200-day average is all the way down at $103. A gap that wide doesn't just suggest an uptrend. It's practically screaming that this trend is powerful and accelerating fast. And it's not just one tool saying this. It's like a whole chorus of them singing in agreement. You've got trend indicators confirming the direction is strongly up. You've got momentum indicators showing the speed of this rally is still picking up. And maybe most important, you've got volume indicators that act like a detective following the money, and they confirm that big institutional cash is flowing in, propping up this price. It's just an overwhelmingly consistent bullish picture. But every good story needs a plot twist. Just when everything seems perfectly bullish, the data starts to reveal a pretty critical warning sign. And this is where the analysis gets really interesting. Is it possible this trend is, well, a little too strong for its own good? And here's the number that signals that plot twist. The analysis shows the stock is trading over 18% above its own sustainable trend line. Okay, so think of the trend line as the stock's natural, healthy pace. Being 18% above it, that's like a marathon runner suddenly breaking into a full-on sprint. It's impressive, for sure, but it makes you wonder how long they can possibly keep it up. The analyst's own words from the report really hammer this point home. They use this exact phrase, suggesting potential overextension. That's the professional, polite way of saying, hey, this thing has climbed too far, too fast, and it might be about to snap back. So what they're talking about here is a classic overbought condition. It's what happens when the buying has been so strong for so long that statistically, the stock is likely to cool off. The RSI, or the Relative Strength Index, is the go-to indicator for this. And for Micron, it's sitting at 77.86. Now, anything over 70 is widely considered a warning sign that the stock might be due for a breather or even a pullback. So now we've got this fascinating tension, right? On one hand, you have this incredibly strong momentum pushing it up. And on the other, you've got these clear overbought signals flashing red. This brings the stock to a crossroads, and based on this conflict, the analysis lays out 4 potential ways this could all play out. This whole situation creates 4 possible paths forward. You have the best-case scenario for the bulls: the rally just keeps on chugging. Then you have a more neutral path, which is a healthy pause. The stock just treats sideways for a bit, lets the engine cool down. But the other 2 scenarios are warnings. A break below some key support levels could trigger either a small reversal or potentially a much deeper correction. So, after sifting through all of that data, what's the final verdict? Well, the whole complex story. It really just boils down to a battle between 2 critical numbers. The first critical number is 164.38. Think of this as the line in the sand for the bulls. This is their main defensive line. As long as the stock price stays above this level, their whole bullish story stays intact. And the second number is 168.99. This is the ceiling. It's the recent all-time high. To prove this rally has more fuel in the tank, the bulls have got to smash right through this level. It's their number one target. All right, let's wrap this up. Here's what this all really means for you. First, the trend is your friend, and right now it is powerfully bullish. That's confirmed. Second, the warning signs that it's overbought are very real, which makes a pullback a real possibility. Third, this means the whole story is now playing out between that support line at 16438 and the resistance wall at 16899. And finally, if that support line breaks, you should watch out for a potential 5 to 7% correction. So in the end, the technicals have laid out this really compelling story of strength versus gravity. We've got a powerful, confirmed trend that's now facing a major test because of its own success. Which leaves us with the final big question. Is the sheer force of this momentum going to win out and push the stock to new highs? Or is a healthy and maybe necessary correction finally overdue? The data has drawn the battle lines. Now we just have to watch the market decide the winner.